This is the Bank Nifty daily charts. You can see big red candle forming, gap up. Again, a volatile day, but today it kind of worked in our favor because of all the premium decay that was left. So the market opened up, gap up, and this was a sort of impact of the US Fed announcement, a huge gap up that was there. And one of the things that we were sort of a little stressed about was trying to figure out where the market would go. Would it rally up or not? And one of the things that we wanted to do today was just wait and see what the pressure would be. So the first 5 minutes were nerve wracking, but we got our best of our emotions or kept our emotions in check. The reasons being that every time there were moves, you could see that there was sharp selling happening. Every time that there are any moves, there are lots of sharp selling. So we wanted to see if that would have impacted us. Plus, we also had a zone at 37, 200 odd levels. Wanted to see if it would crack that. So it cracked one zone and then started sharply correcting, and that's when we realized that the market is unable to sustain its gap up and may come to close the gap. As this was coming down, we had a delta neutral position yesterday, or slightly positive. When it moved here, we were maybe 7 to 12% negative, but as it started coming down, along with correct direction and premium decay, we were able to essentially close pretty much all our accounts by 10 a.m. in the morning, and we were done. Then our plan was just to try and find those small directional moves in one account to try and see if we can get a little more of profits for the week. We got essentially only one trade around 11 o'clock. Now, this is the 5 minute chart. We got the trade around here, 11:05. Essentially, we saw that it's come to the gap, it's bounced, and now it's starting to again correct. And we thought that from here, it will again come to cover the gap and then maybe stay flat, because there was lots of options written around 37, 36, 800. So we thought that the market may start to flatten around here, but the market continued to fall. And in hindsight, again, if we held that position, is what we would have sold for about 130 rupees premium would become zero. But the idea is to manage risk to reward ratio, and we essentially got out quickly, and from then didn't find any other great positions to get in the trade. We thought the market will continue trending downwards. It essentially took out even this support level and moved forward. Now coming back to tomorrow. Now tomorrow is the beginning week again. Couple of swings that we noticed, right? So we've got this looking like a swing area. So around 36, 800, 900 odd levels, you can see the market swinging support. So this will act as some form of resistance tomorrow. And on the bottom, 36, 400 odd levels again is a way where it came and bounced up. So these are essentially levels that we need to be looking out for, right? If market moves above 36 800 900 levels, it can potentially go up to 37 200. And at the same time, if it cracks beneath 36 300 levels, then you have to kind of try and find gaps, because then we don't have any major supports, and essentially it can come down quite a bit. So these are things that we're going to be watching for tomorrow. Again, tomorrow is Friday. We want to go easy. We realize that on Friday we don't get too much decay. So the idea is to build a little bit. If there's still uncertainty about the US Fed or COVID that kicks in, we'll potentially try and close it on Friday itself. And if there's nothing and we've got, larger premiums, larger IVs, then maybe we can write and hold a wide range, building that for the coming week. But that's our plan for this coming week. Essentially, like always, Friday is a day to start slow, build positions so we can end our weeks in profit.